Hey, this is Jeff Scott. It's October 28th. It's 5:04 p.m. and this is my top-down review. This will probably be a short one because since I spend most of my time on these doing half the market and half picking stocks to buy, there's not a whole lot of stocks to buy yet. I titled today Searching for a Bottom. So I keep showing you how we get more and more oversold. That doesn't mean you go out and you buy everything tomorrow. It means you expect, you anticipate, you prepare for an eventual bottom, a reversal, and potentially an opportunity for a run. Like many others, I do expect we'll have a move, a significant move up. I don't know when. A top is a process. We were topping for months. Everybody talked about it. We had HINDYs daily for a week. We knew we were in a topping process. Ultimately, the market dropped. We didn't know which day. It's a process. If you look back at some of the biggest pullbacks in the market, they end with a reversal. Now, not with a whimper, but with a reversal. So if an hour from now we go futures down on at the open, limit down, probably the best thing we could have to see this market reverse, because typically you don't hit a bottom on a Friday. And to me, reversal days typically start with a lower open and close higher and a big volume day. So searching for that bottom, when that bottom occurs, I know what I'm looking at. I'm certainly not saying we've bottomed and it's time to go all in. And maybe it is, but as of 5:05, it is not. This for education purposes only. Recommendation is of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for all the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions you make. One more time, if you appreciate what I do here, I never ask you to pay anything. I don't anticipate that changing. I do monetize these, I guess, with my live meetings. It's not really to monetize it, but it demonstrates an appreciation of what I do. There's one meeting this year. It's November 28th. It's $500. It includes pre and post seminar webinars, as well as one day of seminar. For those of you who are unable to attend live, there is an online only version where you'll receive videos of everything, probably within 24 hours of finishing the meeting. Plus you'll be invited to all the pre and post online sessions. I had lots of people thank me for the programs. I'll show you some of the freebies you'll get as we go forward. If you come live, you'll get dinner with me on Tuesday night, either on my yacht, Anchor Management, or at a local steakhouse, depending on weather, size, etc. Everybody will get breakfast, lunch, and snacks during the meeting. You have your own at home. I'll provide them at the meeting. Screencast videos of each presentation, as well as PDFs of all slide decks. And then I freely distribute to my attendees a lot of goodies that are way beyond the price of admission. If you want to attend, send an email to me quickly to hgsidoc@gmail.com. Payment secures your spot, PayPal mdonk@mindspring.com, or I can give you my address if you prefer snail mail and a check. And if you're attending John's seminar, I'll rebate you back $100. Still looking to see how many golfers want to play golf the day before. And at this time, I do not intend an internet broadcast, just the videos to be distributed within 24 hours. I title my education and these webinars, Be Your Own Guru. And I don't want you just to listen to what I say, what anybody else. It's your responsibility and opportunity to learn from a number of other people. And I learned canceling from O'Neill, improved by Morales and Catcher, Ian Woodward, who really taught me how to make money in the beginning, Ron Brown, who became his partner, George Lee, a great trader from the Pacific Northwest. Van Tharp is a money management guy. Cigar Superior Profit has some complementary indicators and top-down tools that I use called Q. And then John Person, who really taught me how to take a list of stocks and then how to trade them, how to make money with them. He's got great indicators. I'll show you some that I use, as well as educational tools, books, etc. I own almost every program made, and if I don't have it and you tell me about it, odds are I'll buy it, just because I can't say no to a program. But I need TradeStation and Thinkorswim with my purchased indicator sets. HGSI is my main analytic tool. EdgeRater supports it. From time to time, we'll talk about seasonality, and then I obviously use a number of websites. Speaking of websites, here's the website for HGSI. A free 30-day trial, no credit card necessary. And under investing strategies, you'll see a lot of videos like this one. Highly recommend it, and I think it's the best tool on the market for what it does. It's certainly the least expensive tool for what it does as well. Stock patterns are cyclical. We've been going through a period of time where up until recently, every time it looked like it was going to roll over or break out, we went sideways and the other way. It's different this time. We've had a dramatic pullback. We touched 10% pullbacks this week. This was an ugly week. So now we've got into that stage 4 fear. And, how long does it go? Is this a short term and we're about to go on to new highs? Or is the turn down of the 200-day and the 50-day moving average and ultimately a death cross perhaps a signal that we have a long ways to go? It is unusual but not impossible to see big pullbacks in the market outside of a recession. No one thinks we have a recession, and perhaps this is interest rates, perhaps it's politics, perhaps it's news. You got to trade the market we have, not the one you think we should have based upon the economy. So I have been changing my stance over the last couple of weeks. I've talked about cash, smaller positions, selling premium. This past week, I started buying puts. That was my best portfolio. It was my short portfolio this week. Big shocker. Selling calls out of the money to pay for some of the puts I bought, and I did short some stock and bought some contras. It's been a rough couple of weeks. I have a big position in Amazon, so you know what that means. But what does that mean? It meant to me I bought puts on Amazon at the money when it was just under 800. I sold calls at the same price to pay for it. I bought some protective calls way out of the money just in case they gapped up on earnings. So I lost some premium dollars, but I protected my butt on the value of my stock, and that was important. On Friday, it closed with a sea of red. Not a whole lot to say. If you can find a group there that stands out with strength, God bless you. Maybe it's consumer discretionary, has a lot of green, which is kind of interesting because if you listen to Amazon's earnings in their call, in some ways, they were great. They beat earnings by $1 billion. They blew it out of the market. But like always, they downplayed the next quarter's earnings. Now, the next quarter is an important quarter because we're going into the Christmas holiday. And if they're downsizing based upon that, you would think retail would have gotten killed. Interestingly, retail was one of the bright spots, and hence why consumer discretionary looks a little stronger. Major markets tell a story, and just in the essence of time, there's not a whole lot to say. This is the E-minis on the daily. They have broken through significantly through their 200, sort of a spinning top. Are they ready to turn? You tell me. I thought they were ready to turn up here, and that lasted 3 days. The NASDAQ futures have also gone deep below their 200, as have the Dow futures. The Russell futures have led us there. The VIX, interestingly, has not traded as high as it did in the pullback earlier. And so now you have to ask yourself, if we've got lower lows on the market, but not higher highs on the VIX, is that a divergence that, or am I just searching for things, which I probably am, to turn me bullish? But we'll see. And, despite a very down day on Friday, a shooting star on the VIX. So maybe somebody out there says the smart guys are buying now, and maybe we should think twice before dumping everything at the open on Monday. Looking at the weekly, it looks a lot better in some ways. We're in great uptrends, and we've broken down below the 50 weekly. And so is this 200 weekly, which is a far away, the natural place we're going to visit? I hope not, because there'll be a world of pain out there. So could we reverse here? Absolutely. Do I expect us to trade lower before that happens? Yes, because you don't usually bottom on a Friday, and we still probably need that super high volume washout. Now, looking at Friday, you could say, but Jeff, we had that high volume washout. That was options expiration day too, so be interesting to see. Rates eased off some this week. Here's a 10-year on the left, the 30 on the right. Didn't help the market. Now remember, rates matter on certain things. I can't tell you that either of these looked really good. Now, REITs have been doing well, but man, everything looked crappy on Friday as we ended the week. The issue about a flattening yield curve, yeah, it's flattening out here, but flattening meant it was coming down to zero on the spread between, I think, the twos and tens? Yes. And so you won't hear as much talk about that necessarily on TV, but clearly the interest rates have spooked the market. AD lines are in white, the S&P 500's on the left, and you can't see it well, but I'll tell you the Russell 2000, the mid and small cap AD line is tanked a lot more than the larger Russell 1000. So this is broad-based, but perhaps it's impacting some of the smaller stocks more. Here is the NYSE AD line that has rolled over. This is a confluence of a number of ETFs, diamonds, Qs, spiders, Russell, transports. And here's the bonds, which actually ticked up a little bit with the increased volatility and the market rolling over. Breadth on the left, the number of stocks above their 200-day moving average is now about 26%, 25%, which is clearly at a point where in the past we've reversed. In fact, this was the beginning of 18. This was the earlier pullback in 18. We've gone much deeper than that. Here's stocks above the 40, and we're down now into single digits, and some of the lowest we've been going back to the beginning of this market uptrend. So clearly, we are oversold. Here is the 3-month new high, new low, and it has hit my bar, and this is my bar where I expect the market to reverse. So again, I am anticipating a reversal. Jesse Stein put out a tweet, expect big market moves this week or coming. I don't know which day, I'm not sure he said which day, but we're at a expected point in the market to reverse. Now, this market could continue to fall like a rock. It's falling pretty fast. It's hard to believe that will occur, but I'm not saying to go long until you see evidence of a reversal. The daily McClellan, look at where the summation index dropped well below where it was earlier this year in the prior pullback. Does that mean we're going lower, or does that tell you we're pretty much ready to reverse? I think that's signaling to be aware that a reversal is coming, not necessarily here. A weekly McClellan, we're not quite down to the 2016 lows, and that's kind of the market that this is much more like, not what happened earlier this year. So we'll see if we get down to that lows before we reverse. Now the buckets on the 24th, which would have been Wednesday, 35% of the stocks below the S&P 50, in the S&P 1500 were below their lower band, 89% below the midline. That is a bearish picture. And despite the ugliness on Friday, you add Thursday and Friday together, the market's a little bit improved and not quite as oversold as it was on Wednesday. There has not been a HINDY since the beginning of October. No shocker. You have to have new highs to have a HINDY. And we had 12.12% new lows on the NASDAQ. And it looks like 16.23, which is a big number on the NYSE. We are getting to a point where we are either entering a true bear and the market's just going to continue to drop, or we're going to get to a bounce point. We are so oversold. Now, is there a recession? I think not. Markets remain in free fall. Now, interestingly, we did go with some of the back and forth days. We went into more neutral posture, which is the yellow, which is the Woody indicator. But on Friday, we started turning red again. You notice that we've got the mustard and the brown color there, and I only see that bandwidth getting the yellow and brown color in extreme periods of volatility. And then broad sector weakness, and kudos to Chris White from EdgeRater. All it took was a quick phone call or email, and he added the XLC and the real estate XLRE, which were missing. XLC is brand new, and you could see still mostly red on the sectors. Or mostly yellow rather. The XLC is red, no surprise, Amazon's in that one. And healthcare, interestingly, is red, at least on Friday. And again, the bandwidth showing extreme volatility. Canaries in the coal mine, I would use the broken word. Spinning, You can't call it doji. It's not really a spinning top. Maybe it's a spinning bottom. Who knows? Maybe that's a reversal candle. I suspect not. They're broken. You know they're broken. The only one that's really holding up is Tesla, which shot down earnings, and Apple. Interesting thing about Tesla, then they announced the FBI is investigating them, lying about their production numbers. It traded down and then came back up. So the Canaries are broken today. Just because they were leaders in the past does not mean they're tomorrow's leaders. Now, the most recent leaders, this is a group that I put together in September, which did very quickly call the top in the market here accurately, are also broken. So again, that looks more like a spinning bottom. We'll see. And you notice this red bar here, which I should have talked about here. We don't see this very often. This is a phoenix. And when a phoenix occurs at the end of a market pullback, it's often the beginning of the end of that pullback. Now, we've seen multiple phoenixes occur in the past. The darker brown is even a deeper one. So we got a phoenix here. Now, what would you like to see? You'd like to see the market move up, see a kahuna, and get the sense that there's a reversal occurring. We'll see. Maybe this is the first sign or one of the signs. Know your news and earnings. So big week for both. Econoday puts this out for free. Thank you very much. The big one here is employment on Friday, as well as international trade. We got jobless claims, manufacturing. We've got energy. We got personal income and outlays. All those could move the market. And boy, do we have some Fed heads speak. We've got Charles Evans speaking. We've got, let's see, we're going to get the Fed balance sheet. So Evans, I think, is the new vice chair, and he's pretty hawkish on rates. So it'll be interesting to see. Earnings, almost as incredible as last week. A lot of stocks that I have owned in the past are here. Some I have puts in, so I have to cover my ass. Chegg, big, has been a rah-rah stock. Embraer, actually, it's Brazil stock that started to look better, but it's got earnings on Monday, so I'm not touching it yet. Facebook, what new disaster will they tell us about? eBay, Pfizer, FireEye, are they going to be acquired by Facebook? Apple, the big one on Thursday. AbbVie, ExxonMobil, Chevron on Friday. Big week again for earnings. As I've said before, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Sentiment Trader. This is a subscription service that I have, that I subscribe to. And I just want to point out the smart money and the dumb money. Typically, I look at Commitment of Trader report. This is a report that looks at a number of inputs of what they consider the smart money and the dumb money. Now, before this market pulled back, the smart money was down here, was quite bearish. And interestingly, in light blue, the smart money is at 0.68. 0.7 is when the market almost always reverses, but we're within whiffing of that. So we're at a point where the smart money is expecting a reversal, and the dumb money is dropped well below the line. So I look at this and I see something that says the reversal is probably close. I've said it 5 times, 7 times. A reversal is typically an event, and when that event happens, you'll probably know it. And I wouldn't be jumping to make trades just because Jeffrey's saying that a reversal is close. Let's wait for it to actually occur. Market thoughts, how bad has it been? In October, Russell's down 12.5%, the Nasdaq's down 10%, S&P's down 8.8%, and the Dow's down 6.7%. Now, I'm just going to be tempted to guess that you have a lot of stocks that are down more than that number. And if you say you don't, then I'll be shocked, because it's just the nature of the beast. Earnings reports failed to stop the market fall. That was my hope. Didn't happen. The news, I'm not sure that the synagogue massacre in Pittsburgh, besides the fact it was the largest attack on Jews in this country ever, will move the market, but it just tells you that between them and the bomber in Florida, it's crazy in this country. Brexit's not happening as smoothly as some would have liked. I think it's Italian bonds are about to default. We've got people talking about prolonged trade war with China. We got mudslinging. Again, I don't know what your state is like, but I travel. I'm in different states all the time. And I have never seen the mudslinging going on between the Dems and the Republicans and a continued hawkish Fed at war with our president. So there's a lot of news to drive that volatility. We've got more earnings reports. Now, there's some stabilization. Look at retail apparel. I'm still surprised because Amazon sort of questioned to me growth in the holiday period, but they showed some strength. Eventually, the downtrend will end. We are seriously oversold, but we are, as we know, oversold markets become much more oversold before recovering. And watch out for the monthly, as John Persa calls it, unenjoyment report on Friday. All right, now we've looked at a little bit. Let's look at a few charts, and I'll show you some of the things that I'll be looking at before I say goodbye. This is not the yacht. That's my little boat, but it's still a great boat to go fishing. I look at a lot of different things as part of my analysis, and I didn't open up what I wanted, so let me open that up. So I want to show you some of the things that I'll give you at my event, and if you use TradeStation, I've got similar things for TC2000, and because I'm fortunate enough to be friends with my buddy, the ThinkScripter, Bob Meager, we've got some great things there that we can share as well. So let's take a look at market ending on Friday. Let's look at the NASDAQ. Have a look at the NASDAQ. We're here already. So on this chart, you see clearly a person sell signal here, a buy signal, another sell, and we're heading down. So I look at the person arrows. This is a purchased indicator through the App Store. You've got daily, weekly, and monthly in this chart. Second thing I look at is the color of the paint bar, another purchased indicator for Alexander Elder. This tells me it's neutral, but it's bearish on the weekly and on the monthly, which is a big deal. We haven't seen that in a long time. Now in the past, it reverses with the next bar. Third thing I look at is the auto envelope, which is an Elder thing. Stocks and indexes typically don't live outside the outer envelope for a long time. The fourth thing is I look at evidence of divergence, and you saw them at the top. Pretty soon we're going to start seeing green dots will be at the bottom. Those are all purchased indicators. The Elder indicators are relatively cheap, and John has a monthly thing on TradeStation. Down here, I took the Bongo, which I was part of the creators for on HGSI, and I will give you my Bongo indicator that on a single chart will plot daily, weekly, and monthly. I will give it to you if you're a paid attendee. Here is the high jump, and notice that when we have to go back in time, but when we get up to 100%, which we did earlier this year, the market almost always rolls over. So the high jump is sitting close to the bottom. So we're off the lows a little bit. Obviously, that's a very bearish looking picture. So if you attend my meeting, you will get the high jump indicator. You will get my weekly, daily, and monthly Bongo. You will also get, if I go into the advanced screener, and let's look at a stock that I liked, which will be, let's look at A&F. This is one of the stocks that is on my watch list. As I said, it doesn't mean I'm going to buy it because it's on my watch list. It means I'm going to watch it because it's on my watch list. And so here I have three charts. I have a daily on the right, middle is weekly, on the left is monthly. Here is how I look at the Bongo indicator. So on a daily chart, I can see the daily Bongo just turned green. Price of admission is worth just this indicator here. My combined dots, there's a potential for 7 dots. These include a Bible gap up, a pocket pivot, a Mobo breakout, a squeeze, the direction of the PSAR dot, a Kahuna force, and a green candle low or a red candle high. I guess this is the green candle low, and this is the Kahuna force. That allows you on a single chart to plot all those HGSI indicators that I like to use. Not only will you be able to do that on a chart, but you'll also get the indicators so you can apply them, get to where it would be, in a radar screen. So during the day, you can look for squeezes, pocket pivots, gap ups, mobile breakout buys, mobile breakout sells in a squeeze. So I've got a number of indicators that I will give out freely. Now, just for completeness sake, we have a zillion things that we'll share with you in Thinkorswim, but already in Thinkorswim is pre-built John Person's signals, those yellow signals there. And if you were to go to add a study in Thinkorswim, you'll see down here the John Person's indicators, and they have the Person Market Catcher, which looks at relative strength. Its PPS buy signal and its pivots are built in. So those are freebies, and we'll show you how to use them. So obviously it's a weak market. Let's take a look at HGSI at some of what the market is showing us. Do I have redundancy in my tools? Absolutely. Do I use every tool every day? No. I use the tools that I'm most comfortable with and the tools that are most necessary for my trading. HGSI is one of them. So I'm going to go into Major Markets Plus. I'm going to rank it by the top-down view and just get a sense of what's working in the market and what's not working in the market. I can assure you that when you see gold, bonds, silver, VIX, and the dollar and commodities on top, it's not a good time to be in stocks. If we look at a 5-day change in this market, VIX was up 21%, and look at biotech was down 6.8, semis 5.9, and you know what that's going to impact the NASDAQ, which was down 3.8 like most of the others. So typically I get a sense every day. I'll do this, look at what the market's doing. I'll go into the S&P 500. Everything that I have that I demonstrate in HGSI is either built into the program or I'll give it to you at the meeting. There's no cost, even if you know, that one of the beauties of HGSI, it all comes built in. Some of us have adapted certain views that we use, and I'll share those with you at the meeting. So let's take a look here at the S&P 500. These are bingos. These are signals of the baby out with the bathwater. You can see, is this missing what I want? I'm going to go into this view because it's got the Phoenix, I hope. Here's that Phoenix. So we've got baby out with the bathwater. We had a big uptrend and a pretty hard fallback. In HGSI, other programs will do something similar. I touch the top, touch the bottom, look over here and say that we've dropped 10.7% in 25 days. That's pretty painful. Now, one of the things that I've done is I have a multi-band chart here, and this is one that my warning signal is when the price drops into these multiple moving averages. Is typically looked at on a weekly chart, which is set up as a weekly chart, and we're still above, but we're getting close. You could see that the MACD histogram has dropped. We've had multiple negative kahunas. This is a tough market, and again, I expect a reversal soon, maybe even imminent, but I don't make my trades until the reversal's there. Look back, there's no volume on this. Let me change this to the spiders. Look at the volume. The blue is the median volume. And we were kind of median, average volume, whatever, about the same. And then on this day here, we had the second highest volume, and then we had the highest volume on this day here, which is the day that we bottomed. And we opened up, traded down, touched the 200, closed up on the day on a huge volume day. That's what you're looking for to see a reversal. Now, you're probably not going to see that on the S&P 500 because it doesn't have volume, but you will see it on its ETF, the spider. So just looking at the things that matter to me, I don't think I'll see anything different. The Dow Jones Industrial doesn't look as deeply beat up as the S&P, but it's pretty beat up as well. And I could do that same maneuver, and it's down 9.4% in 17 days. I can look at the NASDAQ. %13.2%. Well, ignore that. I did a bad job. Let's try that again. %13.2% in 40 days. Pretty dramatic. Does that look like the other reversal candle with the volume? No, it doesn't. So I'm not quite ready to think that we have hit the lows. The Russell, I use an ETF for that, and you could see the Russell's just the Russell. I mean, now the Russell had its big dump volume day here, and it bounced and it came back down right away. And I guess it's important to recognize that we're no longer in uptrends these are on daily charts. We're in downtrends. And what do we expect to happen in a downtrend? We expect to pull back into their support, or into their resistance rather, and then trade back down to support. What works in an uptrend of buying pullbacks, not necessarily the best style for working in a downtrend. All right, so that's enough of those things, kind of depressing. Let's look at the VIX. Now this is what I thought was interesting, is the VIX did not get as high as the VIX was on the previous dump of the market, and it had a shooting star, despite the fact it was such a weak day. That's sort of a divergence that would make me think the market might be ready to bounce. And then the dollar, well, that's a good place to stick your cash. Actually pretty strong, although it looks like a bearish engulfing pattern at the highs up there. So I hope you don't feel like I'm telling you that I'm bullish, the market's great. What I'm telling you is that we might be getting to a point where we have a tradable bottom. Might be getting to is not the same as saying that we're there. In HGSI, we've got 174 different industry groups. I'm going to look at the ones that have upwards momentum, and I was surprised to see we're actually up to 15 groups. Downward momentum, or upwards on a 5-day period, we have only 9. So that says that a few more groups went from negative to positive short term, but longer term we're weak. On the short term down, we've got 47. So 47 to 9, that's negative. And if I look at the 5-day, you see we have 82. So a little bit less short term to the downside, but we are considerably negative from a momentum and any other thing that you might want to look at. Now, when you look at what's to the negative, e-commerce, computer hardware, infrastructure, software, internet, media, communication, REITs, electrical power, internet, home improvement, application, what do we call those? Growth stocks. Growth is being taken out to the shed and killed. One way to look at it would be in one of these comparator charts, if I can find it. Nope, I bet it's this one. That right here, we're looking at staples versus discretionary, or discretionary versus staples. When it's in the lower right-hand corner, it tells you that staples is much stronger. We could look at all kinds of different things. Growth versus value is traded down, although it did pop up a little bit on Friday. Over here, small caps versus mega caps. When it's low, it favors the mega caps. Spiders versus gold. When it's down here, it favors gold over stocks, not spiders. And then stocks versus bonds. Down here, it favors bonds. Stocks versus commodities, it favors commodities. So we are at monthly lows, near annual lows, and all of these. So growth isn't working. If we look at what is working, we'll see a couple things. Cement aggregates changed to index group. This one is all over the place. I don't know what to do with the chart. See, this one. Yeah, this is one of those crazy charts that goes nuts. Actually had a pretty constructive day on Friday. A bunch of Bible gap ups. It's a Chinese cement player. So if you have some insight into Chinese cement players, maybe you'll know more about this. To me, it looks like a manipulated stock. And that was it above the index group. I go to automobiles. We'll probably see Tesla up here. Tesla had very surprisingly good earnings. It's still priced more like a tech stock, so you always wonder how long that's going to last. But all kinds of I don't touch this stock because the news, the lawsuits, the FBI, not a place that I want to put my money. A Ford Motor Company, this is what you see all over this market, deep, and reversaled actually on Wednesday. It closed down, Thursday and Friday up. Its earnings are out. Those are not lower left, upper right hand charts that we like so much. GM, same pattern. So that was the second best group. The third best group was integrated oils. And it's driven by the top three. And what makes the top three? Something's going on in Brazil. And this is Petrobras, Brazil. There's a lot of strength in Brazil names. And looks like it's ready to break out. Great earnings per share growth. It's always been kept back because of the political. I think there has been some legal settlements. Here's Petrobras, I believe, of Argentina, breaking out. And then here's YPF, which I think is also an Argentinian name. Yep. So I don't like this pattern as much as I like the Petrobras, but two kahunas in a row breaking up above the 50. Mobile breakout from the squeeze. Something for everyone. Going down the list, home builders. All right, let's talk about things that have been hammered with rates going up. But these are the things that were moving. I mean, would have expected with rates. Now, are they still in a downtrend? Absolutely. Have they reversed the downtrend? Absolutely not. But boy, are they beaten down. And some of them still have some decent earnings per share growth and super small PEs. That's Lennar. Here's Pulte. Here's Toll Brothers. The pattern is the same. This one's got earnings per share. It's got a dividend, and you're buying it cheap. Just hard to believe now's a good time to be buying home builders. Biotech. Ugh. There's some here to like, but take a look at LADU, which we will in a second. The president put out some drug payment terms over the week, at the end of the week, which are pretty bad. And I think it's going to put all of pharma and biotech under a lid. Gilead surprised on earnings. That's a bullish engulfing pattern and a green candle low occurring at the same time. That's kind of interesting looking, but in reality, it's been a sideways chart for some time. Vertex got back above the 200. Still, is that a growth stock breaking out to new highs? I don't think so. This one is interesting in that it's sitting on the 50, had a pocket pivot kahuna in a squeeze. This is Viking Therapeutics. Here's my problem with biotech. Here's LABU. Is that giving you good feelings about biotech? And the problem is Celgene, their earnings were fine. Biogen IDEC, Regeneron. These are the big horses of biotech. And if these aren't working, I can't get behind biotech. Yes, some of the little guys look interesting. I agree, and I may buy some. Airlines, I guess with the mitigation of fuel and some good earnings, American Airlines had a big move at the end of the week. Now, are these great charts that you want to go out and buy tomorrow? Not with this market. Maybe if the market pops, you want to have some of these on your watch list so you could see that was American. Spirit looks great. And if you've ever flown on Spirit, you probably don't want to own their stock. Azul, international airline, probably South American, sticking its nose up above the 200, lots of pocket pivots, everything's green above, it doesn't have any earnings per share growth. GOL, another one, this one looks even better, popped above the 200. Again, something nice is going on in South America and Delta. So I'd like to tell you that I found you a stock or better 10 stocks that you can buy that are just going to blow your top off. That's not what I'm going to tell you. I'm going to tell you that build your shopping list, do your boxes, and then start to see when the market changes. I did find some stocks to put on my watch list. Let me show you them, and then I'm going to hang up, say goodbye, and go on with my life as you should be doing too, because there's not a whole lot to do in the market right now. These are the ones that made it through my screening. I'll go very quickly and then say goodbye. 5 minutes to do 27 charts. I can do that. I can do it. I can do it. I can do it. We already looked at this. This is that cement stock. Buy at your own risk. It's interesting looking. TAL, here's the pattern. Big sell-off. Looks like a bottoming pattern. Here was your high closed doji. Another high closed doji breaking above the 50 at Kahuna. Mobile breakup from a squeeze. Held up well on Friday despite market ills. It's got earnings share growth coming back in. Trades at a high PE. If one of the better looking charts, but still a downtrend. I showed you Petrobras already. Chipotle. Pull back to the 200, couple of kahunas, pocket pivots, earnings up, mobile breakout from a squeeze. It makes money. It's got earnings per share growth. As long as people don't start complaining being sick in their restaurants, I think Chipotle looks interesting here. I play with options. Decker's Outdoor, Uggs, that's what they make. Pull back to the 200. It's actually been moving up for a week. Broke above the 50, a Bible gap up, squeeze, mobile breakout, pocket pivot, and kahuna. Maybe there's something in Uggs besides huge earnings coming in with the Christmas quarter. ResMed, a medical device company, again, a hard sell-off. Why did I put this on my list? It broke above the 200, a Bible gap up, pocket pivot, and a kahuna. These are not perfect. Nothing's perfect after the market's blown up the way it has. Well, maybe this one is. Tractor Supply, where's the pullback in this market? Has done well, went sideways, pulled back to the 50s, launching off of it, mobile breakup from a squeeze, pocket pivot, kahunas, makes money, pays a small dividend. Breakouts have not been working. So I'm not telling you to go out and buy it, but watch it. And if this market turns around, maybe this will be a leader again. Aon pulled back to the 50, had a Bible gap up on Friday. Good earnings per share growth compared to PE, pays a dividend, and this is a company that should make money with rising rates. Burlington, this one in raw stores look very similar, pull back to the 50 and breaking out again. I already said breakouts fail, earnings are out on this stock, or they're not till November. I'll tell you, Canadian Goose was lined up around the block in Chicago this weekend, although the stock didn't make my list. Burlington Stores, one of those retail stocks. Here's Toll Brothers, we talked about housing. Abercrombie & Fitch, we talked about retail. Let me just look at here, and you can see pull back, but it sort of has got a little bottoming pattern. Has a kahuna, pocket pivots, mobile breakout, pays a 4% dividend. It's under accumulation. Federated Investors, this is about the only investment manager that didn't die on Friday, so they must have had earnings or something. Pays a 4.2% dividend. I'm not touching it because the others are doing poorly. I'm going to watch it. Maybe there's something to it. I showed you Viking Therapeutics. American Eagle Outfitters like ANF at a bottomed, double bottom, starting to move up. It's got some resistance above it, no rush here. Alta Salon, I do have some of this still, pull back to the 50. Bullish move off the 50 on Friday despite a weak market. Earnings are not to November 29th. I think Ulta is one of the better charts right here. Urban Outfitters, same basic pattern as ANF and American Eagle. They're all teen retailers, so maybe something's up in that category. Embraer looks like the retail stocks has pulled back. Couple kahunas in a row, pocket pivots, mobile breakout from a squeeze, turning green above. I point out earnings on Monday. I'll watch it after earnings. Arthur J. Gallagher pulled back to the 50. This is another insurance company, 2.2% dividend. Here's gold. We talked about it. I put this here for shits and grins. I made a lot of money on this stock in the first half of the year and gave back about 20% of my gains when it died. I'm out of it. I'm a sucker for good earnings. It still has earnings per share growth versus its PE. I like watching this as a sign of what the Chinese stocks are doing. It's got a double bottom there, but I wouldn't touch this until it got back above its 200 or its 50-day moving average in blue. This has been a leader, renewable energy, big earnings per share growth, under demand at a good buy point, sitting on its 50 and a squeeze with a kahuna. Neogenomics, I don't know this company at all. I probably should because I do work with genomic companies. But here's a healthcare breakout to new all-time highs, two kahunas. Think about the market we're in. That should make you pay attention to something. Banco Santander is a Brazil bank breaking out. Not a beautiful chart, but if I just look at it from the last 2 months, it's pretty nice. Lots of pocket pivots, 2.5% dividend. Kohl's, another retail stock, looking like it's set up to run similar to the Abercrombie and American Eagle and Urban Outfitters. And this is a Brazilian refiner that caught my interest. It had a gap up on Friday, took out its PSAR, pocket pivots, kahunas, volume coming in. This is another play on South America, 3.5% yield. Horizon Pharmaceuticals, it's only a play on the chart. I don't know anything that's changed here. It pulled back to the 200, had a kahuna and a significant bounce. It's still in a downtrend. It's at about 18. It's probably not free and clear until it gets above its 50. I put it on a watch list. It's got great earnings per share growth compared to its multiple. Here's a bank that looked better than the rest. First Bancorp, good earnings per share growth, no dividend, but growth twice what its multiple is, sitting on the 50. Mobile breakout from a squeeze and a kahuna. This line here is the bank group strength. You would think regional banks would benefit from rising rates. So on that note, I want to reiterate, come talk to me, email me for information about my live meeting. Would love to see you. Be careful out there. It's a tough market. We're going to bounce. I don't know when we're going to bounce. Put together your watch list and look for reversal signals like I talked about. And when the talking heads on TV say it's never going to end, that's usually the beginning of the end. Goodbye, everybody.